Hey guys, I'm Paul from OpStart, and thank you so much for listening. As a reminder, we are an outsourced finance and accounting function for startups and high-growth businesses. We handle all of your bookkeeping, taxes, fractional CFO work, billing and operations, with the goal of keeping you efficient, scalable, and saving you time so your founders can focus on what they do best. If you want to learn more about what we do and you're having problems with your own finance and accounting function, just reach out to us at www.opstart.co or find me on LinkedIn, Paul Anthony. Happy to chat. All right, welcome Greg Slawson into the virtual studio. Greg, it's great to see you.
Likewise.
This is a fun one in particular for me because Greg and I have known each other now for it's
I think it's 12
over
years.
10 years.
Yeah.
Yeah, 12 years. We were paired together as random roommates in the Buckingham's summer intern housing complex in Chicago before our senior year of college,
Yeah.
which is fun, and have stayed in touch and been friends ever since, although we never lived in the same city again. But as small worlds go, now Greg is the COO of a company called Proper Voltage, which we'll learn all about. And they use OpStart for their accounting and tax functions. So we've had a chance to work together a little bit more.
Definitely.
Yeah. So I guess to start, Greg, would love for you to just give people a little bit of your background, and I want to pick on a couple pieces of the journey that I find interesting.
Sure. So originally started my career out of school at Goldman Sachs in New York. I was in sales on a sales and trading floor. I was in sales, and what I did was basically like all sorts of different structured fixed income assets, from mortgages, structured credit, credit default swaps, even bank loans at some point. And so I did that for almost 4 years. And I basically, while I was doing that, I was actually in the process of being transitioned over to a trading desk. And I kind of realized that I wanted to do something that was a little bit more entrepreneurial. And so started kind of looking around, did a bunch of interviews with different types of companies, did some sales interviews, did some more financial capital markets interviews. And my goal has always just been to be an entrepreneur. And so I was trying to figure out how do I kind of leverage my current skill set into something that will allow me to get to that point. And so I was introduced at that point, the name of the company was called LoanPal, and they transitioned that name over to GoodLeap, which at the time was doing around 30 to 40 million a month in solar loans. And this is early 2019, late 2018. And at that point, like, solar was kind of just a very obfuscated term. The ITC, the tax credit, was really just starting to reach mainstream. California was really the only state that was like seeing meaningful progress, along with Arizona, a little bit of Texas. And I remember speaking with the president and the head of capital markets, who became my boss. I was just super fascinated by the way they kind of were thinking about the marketplace. And I was very open and honest with them, like I am, about how I wanted to be kind of and go into a place where I could learn a little bit more entrepreneurship. And they laughed in my face and basically said, then you'd come to the right place. And so I remember I moved out to San Francisco, had never been there before, just moved out there. And I remember my first day, there was like two dogs in the office, and I'm used to everybody kind of wearing like a shirt and
A little
tie.
different from Goldman.
Very,
Yeah,
very
no
different.
jackets on the
People
back of
are
the chair.
Yeah, dogs are barking. The two people I was supposed to work with were traveling for the entire week, and they were just like, yeah, can you make this or make that? And it was genuinely like one of the hardest transitions I've ever had to make in my life, because I had to do a bunch of things right away that no one had taught me how to do. Create
What
a
drew you into
solar,
here?
100%. A solar model. There was no treasury team at that point. There was no servicing team at that point. I had one person that kind of worked underneath me. We were a capital markets team that was effectively 2 to 3 people, depending on how you thought of it, because the one analyst was more of a treasury analyst. And,
Right.
we were effectively doing multiple things with duct tape, with Excel spreadsheets, which, we scaled by the end of that year to close to $200 million in loans. And so I saw from that perspective, I was the second official hire on that team. By the time I left, we were at mid-20s. And so I got to see a phenomenal period of growth, which was amazing. And I had a boss and a leadership team who just let me do whatever whatever I could. And it actually led me to a kind of like an interesting point in my career where in 2022, I got pretty bored. And so I approached the leadership and I just said, hey, look, like I feel like I've learned all I need to learn here. I want to do something else. And I was just, again, very honest with it. And they said, look, don't leave. We really like you. Why don't you just dial back a little bit and find something that's not a direct competitor, and you can still work here for this period of time. There was something that was kind of active from an acquisition standpoint, and they wanted to make sure that I was there for it. And
Okay.
so at that time it was COVID, so I was or late COVID, and so I was living in Utah with a friend, and he was moving to Denver, and he basically had insinuated that he wanted to buy a small business. So him and I went on bizbuysell.com. We got connected to several different business brokers, and we just started looking at dozens and dozens of small businesses to potentially acquire. And so we ended up acquiring in 2022, and we started the process in 2021. A company called Daffy Apple. Purchased it with an SBA 7A loan, kind of came in as partners, and then we were able to kind of run that successfully. Absolutely most chaotic period of time in my entire life where I was managing that, working at GoodLeap. I also, after I acquired that company, the LPs at GoodLeap started saying, oh, well, hey, we actually have these portfolio companies that would be really helpful as somebody who understands small business can go look at. And so they kind of sent
Yep.
me to different parts of the country for different companies they were looking at. uh, Something I always tell people is doing two is doable. One is easy, two is doable, three is impossible. And so there is at one point where I was probably working close to 90, 100 hours a week trying to balance all three things. Just bought a business, I have this big business loan, and it was an incredible period of time where I learned probably the most of my entire career, but it was also just completely terrifying. So
Sure.
uh, got that to a good point. Ended up actually selling out of that business last year in a successful outcome, which was awesome. And as part of that process of looking at different businesses through LPs, I was connected with a company called Zapbat, which became Proper Voltage. And at that point in time, I had told GoodLeap again, hey, this time I'm actually going to leave. I had decided that I wanted to get away from fintech and finance in general, and I wanted to focus on something that was a little bit more hardware programmed. Part of the logic for that was basically after ChatGPT 4.0 was launched, I had this view, I think pretty early on, that SaaS was just going to be a little bit of a mess for the next decade. And I thought that, the 2000s were the decade of hardware, 2010s were definitely a decade of software. And my theory was that the latter stage of the 2020s were going to become a decade of hardware. And
Yeah.
so looked at a bunch of different spaces trying to figure out what I wanted. Batteries was kind of top of the list. The first time I met with our CEO, I had no idea what he was talking about, but I told him that he needed to hire me because they were at 5 or 6 employees at that point. And so
Yeah.
we started negotiating, and I joined that January. So that conversation was in August, and I decided to join in January, and I've been here ever since.
Awesome. And so many different things I want to hit on with that story. I'm tempted to go straight to proper voltage and why you chose batteries as the space and them as the particular company, but let's save that for a second because there's a couple more interesting things
Sure.
here. First of all, for anybody listening that wants to be an entrepreneur, I want to highlight the experience of being able to kind of build a department within a business that gives you freedom that you had, right? Is a really great pathway to do that. You growing your team from 2 to 20 plus people is amazing. And I want to hear some of what that taught you that stuck with you. But I also think it's probably important to highlight just when you were interviewing around, you were looking specifically for a company that would allow you to be an entrepreneur within their ecosystem, right? And
Definitely.
and that's not always an easy thing to find. So I share a little bit of sort of what stuck out to you early in that experience and it's stuck with you since.
I think the single most important piece of advice that I received, even at Goldman, was basically you want to hire your next boss, and you want to also admire and want the life of the person you're going to work for. And so
Yes.
when I was at Goldman, honestly, the people there are incredible, and I will never ever talk down about those people. But the lifestyle that they lived and the keeping up with the Joneses element, it basically created this almost like artificial honey trap where you're forced into this lifestyle, and it's really hard to leave because you're going to receive a pay cut no matter what. And for me, as somebody who kind of
Uncos
knew
is
that
what we used to call it. Yeah.
yeah, and so when I was looking for that next stage, I really was focused on who I was working for. And so that was the single most important thing for me. It wasn't necessarily where I was working. I didn't care as much about the compensation. I wanted to cover my living expenses. I just wanted to make sure I worked for somebody who I thought was really smart, who I admired, and whose lifestyle was something that I wanted to at some point replicate. And I found that in my GoodLeap boss and and his boss as well. Him and I mean, he's coming to my wedding this summer. He's awesome, and he just basically had this crazy level of trust in me from an early stage that I was able to then leverage, and candidly do things that I probably should not have been doing, and I kept doing them well, and then I kept getting
Sure.
promoted, and yeah, I think it was just kind of having that intuition. It wasn't necessarily this formulaic, quantitative piece of information that I was
Yeah.
looking for.
No, I think early in your career, like with the benefit of hindsight, I mean, you knew it at the time. I appreciate it now a lot more than I did back then. Choosing the who you work for over the, what the job is and the salary and whatnot is so important because the asset you're investing in is yourself and you've got a lot
100%.
of years ahead. So whatever you can learn and whatever relationships and goodwill you can create, that's really what's much more valuable in the long run than specific resume credentials. Um, and then moving, I guess, into the Daffy experience. So
Yeah,
acquiring, operating, and then ultimately selling that small business, which is very different from the others you've worked at across the board.
correct.
Uh, Unique experience. I'm curious how much of it is applicable to the other, like to your job now and the other roles you held versus how much of it seemed very specific to, a candy apple business.
I would say maybe 10% of it was very specific to a candy apple business, and 90% of it is directly applicable to both small and large companies. And I think one
Yeah.
of the things I always tell people, I've advised several friends who are kind of thinking or looking to purchase small businesses. And number one, it is a crazy commitment. And when you have a personal guarantee with your name on it, the way you go to sleep thereafter is different every single night that you have that gun pointing at your head. And the other thing I always say is you are just going to learn by drinking out of a fire hose. There's a funny Twitter meme that goes around with a lot of the MBAs that are looking to do search funds, which basically is something along the lines of like a Harvard MBA knows nothing compared to a 40-year-old college dropout running an HVAC business, and it could not be more true. It was one of the most humbling experiences of my entire life. That first year, we clawed and fought to figure out how we kind of wanted to run it and how we wanted to run it differently from the operator that was running it before us. But the amount you learn from a general administrative standpoint, from a cash flow standpoint. I mean, we were effectively a hardware business. Our hardware was caramel apples. That was seasonal. We received 85% of our revenue in 10 weeks of the year. And so how do you run and think about that type of business? You have to get a credit line, for example, and you got to get that from a bank, and you've got to make sure that your receivables are matching your payables. You can think about creative things like maybe changing your fiscal year end, which the previous owner had never done. But that allows you to have that cash for the entire year. And then a lot of times with these smaller businesses that the baby boomers are kind of trying to sell to, either their children or millennials or Gen X, et cetera, in many cases, they are the business. And so the way they're running and the way they're reporting sellers' discretionary earnings is very different from the reality of the situation. Ours, for example, one of the things that we saw was he was employing his wife as a receptionist and paying her basically nothing. And we didn't properly factor that into the EBITDA calculations, for example. Now we were able to grow our way out of that comfortably, but that's just one of those little things that I would now
It's an
understand and look
immediate
for.
salary you weren't thinking you needed to add to the books, right?
Yeah, but then you start realizing how much if you're less involved and you're willing to theoretically take a little bit less upfront, the ability to actually grow the business instead of micromanaging it, which is what we did. We over doubled revenue in 3 years. Now, some of that was food inflation, but a lot of that was our own implementations and us kind of taking the reins off and hiring the right people. You can do some pretty awesome things.
Yeah. Yeah. Per your meme point, one of the best, I guess, explanations of that trend that I've seen is like traditionally you'd go get your Harvard MBA, learn the principles that apply to every business, and then go work in like private equity so you could buy and influence a
Yes.
bunch of businesses at that high level. And then people sort of got disillusioned with that. And now it's cool to go own and operate your own business, but you don't appreciate until you get into it all the things that need to get done, right? Like to put it at the
All the things that
simplest
go wrong.
possible level.
Yeah.
Yes, like just everything you take for granted working for a big company. Once you are starting and operating your own small business, you gain so much appreciation for. Like it all seems so easy on the surface. And then it's like Susie's the only one that knows how we file these types of things,
Yes.
right? or Jim's the one that has the relationship with this key vendor, and if we lose that vendor, we're screwed. So Jim's got all the leverage, right? Like there is so much of it that is duct tape and glue and personal relationships, and you know, transforming it over the course of 3 years is an impressive thing to do.
Yeah, probably the dumbest thing I've ever done, but also one of the most fun. I would never want to do that for the first time again, but that was better than any MBA I can imagine somebody could get, because there was no failure, was just literally not an option. And
Yeah.
it's scary, but it also makes it really cool when you succeed.
100%. Yeah, I always say I felt like I learned more in the first 6 months after starting OpStart than I did in the previous 6 years of my career.
No
There's
doubt.
just no replication for going and having, the full responsibility over a small business.
Yeah, and there's just no way I could have been hired to do what I do here if I wouldn't have had that experience. I would not have been qualified, and also would not have been able to have the intuition and the tribal knowledge needed to be successful.
So let's talk about that a little bit, because you mentioned that your decision to go join then ZapBat, now Proper Voltage, seemed like it was not the same as, joining the last energy company you worked for instance, right? You
Yep.
were very focused when you left Goldman on just who to work for and how to gain entrepreneurial experience. Then you had that both with, the solar company, GoodLeap, and then with Daffy that you actually purchased and owned.
Yep.
But coming off of that, you were much seemingly more focused on the opportunity, the industry, the technology that was in play. Talk to me about, I guess, why that logic shifted for you, and then why you ultimately landed on ZapBat / now Proper Voltage as the right opportunity.
I wouldn't say it fully shifted. I think Charlie and David, who are the co-founders who I still work with and talk to every single day, are incredible people. And the first time that I spoke to Charlie on the phone, he was probably the only individual I've ever met who was more passionate than I was. And I love passion. I think that's a cultural value that we have here at Proper Voltage. We want people to feel passionate about what they do, what they build. And for that piece where Charlie was describing what we did and why it solved such a great, like this big problem, that inspired me. And I felt like I could help him from an operational and business perspective get that from the future employees and from the business in a way that he, as somebody that had an applied research for batteries background and more of an engineering, pull, could do on that side. And so when I was looking for companies, though, the actual industry mattered to me more than it did when I joined GoodLeap. And I wanted something small. I wanted to, part of it's ego driven, if I'm being completely honest with you. You want to make sure that you have your fingerprints over the build and what scales. And there's also this question where it's, effectively with Daffy, we were never going to build that into $100+ million business. And at GoodLeap, when I joined, I think the valuation was somewhere around 100, and we scaled it to, well into the billions. And I was a very small part of that. I wouldn't classify myself as a big part of it, but I wanted to make sure that I could have a little bit more of an impact on this go around. And I thought that I was ready for it. And so part of it's just ego driven, to be completely honest with you.
Sure. Tell me about the technology you guys have at Proper Voltage, and I guess what excited you about it, or what excites you now.
Yeah. So effectively what we have done is Charlie worked for Northrop Grumman, almost the skunk works of Northrop, on their battery side. And what he was tasked with doing was creating, or enabling new chemistries to connect with Joint Special Operations Command soldiers and weapons that the Defense Department wanted to enable. And they kept running the same issue, which was advanced battery chemistries could not integrate to existing, systems, electronics, et cetera. And so after trying to do that for several years, Charlie basically decided to create a company to start doing that. Now, there's a couple issues with that. The first one is, in order to do that, you have to create a new layer. And the second one is you have to basically have products that need the new chemistries, and new chemistries that are market ready and commercial that can go into those products. And then you have to connect them together. And so for the first 4-ish years of the business, they started around 2020. I joined in 2024. They were in more of an R&D mode. And so it kind of created the perfect time for me. The product actually was built by the time I got there. It was patented, the IP was done, and it created a really good opportunity for me to kind of come in and help commercialize it We rebranded the company to Proper Voltage. And, what we do is we are the intelligence layer for advanced batteries. Up until now, batteries are basically a limiter on what products can do. We turn them into an enhancer. So we're starting with two industries that we think the limits kind of hurt the most, and the commercialization opportunity is immediate, which is mostly data centers in uninterruptible power supply, and then robotics, both in humanoids, AGVs, et cetera. And then we also think we have a big role to play in the defense space.
So just to repeat this back as someone who's way less familiar with the technology, you guys are essentially a layer of connective tissue that allows battery technology to progress at a higher pace without being restricted by the product specifications.
Yeah, the other side of the
right?
technology. That's exactly
You're like
right.
an API key for batteries.
So yeah,
you-
and I think there's something that most people have probably heard the phrase BMS. It stands for Battery Management System. And what a BMS is supposed to do is effectively be a safety feature. It's monitoring temperature to make sure something's not starting on fire. It's monitoring state of charge. So if you have an e-bike and you can kind of see, oh, hey, I have,
Sure.
52% battery life. That's what a BMS does. What we do is all of that, but we also digitally adjust the voltage of a product in a battery as it's outputting to match whatever the product needs. And so I'll give you an example of this. A power drill. The last time I moved in my apartment, I kept having to recharge my power drill because towards the last 30-ish% of the charge, it would slow down and I couldn't, drill the screw in the frame. We, with our battery operating system, can allow for that to be 100% power output through the entire discharge until it's fully zero. Now, you might look at me and say, well, why do I care about that? You might not, but I'll tell you who would care about it. A drone manufacturer who needs an extra 20% of battery life from their existing battery. A humanoids robotics platform who, again, after they lift a big package, they exert so much power that the actual available power is limited in the last 40% of charge. And also, alternative chemistries do not run at the same standard voltage of lithium ion. Lithium ion runs around 3.6, 3.7. You cannot connect a lithium titanate cell, which is the first chemistry that we worked with, which is 2.3 volts per cell, to a 3.6 system. And so we can digitally adjust that to be 3.6 to match what the product expects and wants, but just use a lot more interesting features, candidly, of the battery.
Fascinating. So you mentioned data centers and robotics being the initial target verticals.
That's right.
Obviously, two spaces where I think all of us, even outside the industry, know there's a ton of movement happening, and probably somewhat validating to the thesis you mentioned at the start of this, which is that this would be the decade of hardware, right?
Yes.
So you joined this company pretty shortly after, ChatGPT became a household name, right? Did you see how much sort of the AI boom might unlock the need for this technology?
I think at the time I was a little bit naive to exactly how it was going to change. And I think,
Sure.
I've since become a lot more educated in understanding that AI is actually the key limiter to why humanoid robotics have never been prevalent in the history of mankind. And I think where we currently sit at the middle, call it, of 2026 is very similar to where I think we were in, call it, late 2021, early 22 with the AI boom, where there's a bunch of these things lurking. They're getting built by really, really smart people. And everyone keeps thinking about humanoid robotics the same way we used to think about AI, which is cool. I'll believe it when I see it. And I think starting in 2028, we're going to see a lot of market ready, fully deployed systems that are going to come out all seemingly at once that have been taking advantage of these newer chips and these newer AI models that can finally be leveraged to allow these systems to take flight. And I think by the end of this decade, and I'm literally saying for a 3-year period, 28, 2029, and then into 2030, it's going to feel like AI does right now.
Yeah. No, it makes a lot of sense. It's easy to forget now that AI is so pervasive that it was considered sort of like this
3 years ago.
fool's gold,
Yeah.
Jetsons flying car type of thing. Well, to your point, very smart people were spending a lot of time and money developing it in the background. And you're right, humanoid robots, we've all seen the Boston Dynamics videos for years, but never seen them actually in practice. Like the best robot that most people have in their houses today is probably a like Roomba, vacuum,
Yeah.
you know?
Well, funnily
Um,
enough, we did a project for Boston Dynamics research arm last year, and effectively what we were able to do with one of the issues they were having was kind of similar to what I said before, where the voltage curve, as they started trying to do, and the one we were in was something that was effectively two wheels. They were trying to get it to do this like double backflip, and they basically said every time we get it to do like one backflip or a single, it effectively can't do anything more because the amount of power available for output is so low. And so we completely flattened that curve and allowed them to triple what they were doing before by switching to a new chemistry and with our battery operating system. And I think we cut the charge time from something like 3+ hours to 6 minutes, which is really cool. And so it's just an example again, and that was such a great project for us to do because it's leading to other robotics projects that now will actually really be commercialized. But sometimes staying on the sidelines and lurking a little bit with key
yeah.
markets that you know are going to be big. You might not be right timed exactly in this moment, but you know it's somewhat imminent, can pay off pretty big.
Well, yeah, and it's also a fascinating case study, I guess, in just to your point on timing. Most of us understand at least that the hardware and software need to ultimately both catch up to a certain level, right? For a robot to exist, we've seen, I don't know, 10 years ago, Boston Dynamics was putting out videos that showed the hardware for their robots could do pretty human-like movements and cool stuff. Factory robots have been very precise for a very long time. The
Yes.
software now with AI is allowing those robots to be much more dynamic, obviously. And then the layer I would have never thought of is how important the actual power is to connect those two pieces and unlock higher potential.
Yeah. And even another feature that a couple of customers that are pretty large and very well known in the robotics space that I can't mention, they're really interested in what they call like hot swapping feature, which is effectively you have two batteries in the same system, and one is always powering the robot or the AGV or whatever the system is, so there's zero downtime. And
Yeah.
previously the way you had to do that was incredibly inefficient, incredibly clunky. It cost a ton of money. And the way we're able to fully integrate that within the battery system is not only it's like completely coordinated. It's not competing against one another, but it's all part of the battery. We're monitoring exactly how much energy is left for each battery, the state of charge, which one you should use at any given time. If one goes below 20%, we can switch to the other one, and that's a feature that folks are pretty excited by, and that's part of the core infrastructure and technology layer that we have.
And what's the value add within the data center space?
So the data center space is completely different, and it is one of the data center space is one of the most interesting markets that I've ever done any sort of research on. The amount of value added reselling that goes on, and you can understand why, is pretty insane.
Yeah.
So where we're actually focused is in a spot called uninterruptible power supply. And then within uninterruptible power supply, there's some major OEMs that have been doing this for a very long time. The major batteries that are uninterruptible power supply are mostly lead acid. There's some lithium ion, which Samsung is actually the biggest competitor in. But for us, the key piece is building effectively that battery platform for the next wave of AI data centers. They're requiring a lot different voltage, and the amount of switching that they need on a very rapid basis is quite different than what was needed before. And what we're enabling is both the new chemistries. So the systems we're launching later this year are sodium ion, but also pairing that with a state-of-the-art backend, which we just finished the MVP for, and we'll launch kind of the full version later this year, where it's to the point of the battery operating system. It's taking all that information, all that data, and it's also putting it in a very digestible way for the customer, which in a lot of these cases is actually the data center operator. So what we're able to do is use that full battery life. Sodium ion in general has an issue where the amount of power it's able to output as it gets discharged is pretty low. And so it just wasn't economical to be in these data centers. And we're able to make that constant throughout the entire discharge. And why they would care,
What's
oh, sorry, go ahead.
No, I think I was going to ask the same question, so go ahead.
Yeah, so why would they care? First thing, it's safer. So sodium ion has very little thermal runaway or fire risk, just because of the way the chemistry is. There's different variations of sodium ion, but the electrolytes are actually further spaced than they are in standard lithium ion. So the risk of it creating thermal runaway is much lower. It is also able to last longer than even lithium ion phosphate or LFP, which is the major lithium ion component in there. And it's better from a temperature operating range piece.
Got it. Okay, that's fascinating. So essentially, your technology, especially I guess with the value-added reselling that's going on, I imagine you're talking about a lot of hardware components that they will buy and repurpose, but need to do something a little bit more high powered than they would have done. Is that roughly an
I
accurate
wouldn't,
assumption?
yeah, I wouldn't necessarily say that. I think they, on the front end, it's kind of the same story. They have historically thought of these batteries as a limiter. And if you can push
Okay.
more power out of them, for example, you can take up less space. And that's more in the high power, the AI, the data center piece. In the lower voltage space, which we call low voltage, it's effectively just telecom, hospitals, liquid natural gas backup plants. They the battery we're developing for that space is really cool because it's configurable anywhere between 12 volt and 150 volts. And typically, that is served by multiple SKUs to this point. For us, we can serve it with one SKU. It's a safer battery. It has that infrastructure layer and it can plug into the existing systems. And a lot of the insurance companies are not willing to insure anything that has lithium in it for whatever reason.
Yeah, so practical business case here is essentially you can achieve better battery performance, safer battery
That's
usage.
correct.
You can probably save some money on energy costs and certainly
Yes.
save some space on it, right? And you can do all that without needing to replace the end hardware that actually
Yes.
wires into what you need the tech to do. So
It
you
can
guys
retrofit.
are that connective layer and interface that allows them to get all of that done. You don't necessarily need to build the batteries yourself. You just help them plug in the better batteries as they go and make it an easy transition.
In this case, we actually are creating the batteries.
Okay.
For the system. So, but yes to all that. And now what they plug into is what is called uninterruptible power supply, which in this case are the actual power distribution equipment that connect to the compute layer themselves. And so, if there is any disruption whatsoever in power, what's happening is it's going through the UPS system first, and then it's actually going to the compute layer. And if the power goes out for any predisposed period of time, instantly the UPS turns on. It pushes that power to the compute layer, and then waits for the power to be, undisturbed and turned back on, and then it pushes it back out to whatever someone's using Shazam. It would it
Yeah.
would get their song to them.
Uh, Incredibly fascinating. Really cool. And I don't know what you can share or want to talk about on this point, but I also think we're having this conversation at what I would categorize as a pretty cool inflection point for the business as well.
Yeah.
You've been there for a couple of years. It's been in R&D for 4 years before that for various market reasons and probably product and R&D reasons, right? It seems like the timing is kind of now where things could start taking off in a really exciting way.
Yeah, that's correct. I mean, we're there's going to be one, if not two, robotics batteries that we're going to ship, smaller units this year, pretty large units starting early next year. Those are going to be for very cool robotics platforms. I can't really disclose which type, and for well-known companies. And then on the UPS side, we're going to be shipping those systems at the end of the year, in both sides, from the low voltage and then from the data center backup perspective as well. And then we're already working on V2 and V3 in the background, one of which is going to be with a new chemistry that's going to be commercial next year, which we're super excited about because it's going to basically leverage our platform for the next stage of the AI compute layer. NVIDIA is kind of changing how they typically scope out for UPS, and we want to make sure that we're getting ahead of that when it comes online in 2028.
And are you guys going to be raising some capital to kind of fund that continued development?
Kind of have an active process in place that's currently oversubscribed that will probably close here over the next week or so. And then there could be another raise at some point early next year, but the goal and the forecast is for us to be profitable towards the end of next year. And it's more
Love
of a
that.
working capital consideration that we need to be thinking about just because certain procurement times that we're dealing with, For the UPS space, it's actually a little bit favorable, although some of the European customers that we're talking to have different payment terms. And so just want to be a little
Yeah.
bit careful there. And then in the robotics space, it's more of standard procurement and or payment terms. And so for that, you just need to be a little bit more thoughtful from a cash flow perspective. But that's we're looking for more of a strategic partner, I would say, in that.
Can we nerd out on working capital financing for a second?
Sure.
Because I know you've spent some time in this world.
Yeah.
I think it's a totally underappreciated thing for startup founders. Like most of us, we kind of get into the world and we know you just raise equity when you need it to grow and whenever people will give it to you, and certainly to fund any sort of shortfalls um, on the cash side, right? But so many businesses don't realize that just by kind of improving their working capital dynamics, financing certain timing gaps between payments received and outbound, um, they could actually scale much longer while preserving much more of their equity and not needing to raise the same type of really expensive equity capital. I know you did this at a very different scale at Daffy from the sounds of it, right? And now you're thinking about it here. Um, Talk about the importance of that and how you think about prioritization and structuring.
Yeah, I mean, working capital is the lifeblood of a business, right? And I think my experience at Daffy was a little bit different than the one here, but there are some levels of overlap where negotiating upfront from a payment terms perspective, even when, we're delivering a demo unit, for example, can have benefits that we're able to pay off far into the future. Now, we're not at a level of an Apple, for example, and so we're not able to negotiate payment terms like they could, but we can leverage and use our technology's moat that is there to, and sorry, my thing looks like it's slowing down a little bit, to basically push back a little bit on payment terms. And sorry, I'm just gonna close a couple. And so I think one of the things that I've been kind of and I think
Okay.
one of the things that I've been, or hopefully we're good now. Sorry
Good now,
about
I think.
that.
Yeah. No, it's okay.
Yeah, I think one of the things that I've been super focused on here is just making sure that upfront with both the contract manufacturer partners we're working with, and then also some of the longer lead time supplier relationships that they match. And so I created a pretty robust working capital model to make sure that I'm kind of measuring that, and then reaching out candidly to the partners that we're going to need to work. I think for some of the initial deals we'll do next year with UPS in particular, I'm not super worried about working capital. But once we deploy 1 to 300 megawatts of energy, which is decent amount of energy, that'll kind of make us eligible for some of the true hyperscaler relationships that we want to cultivate,
Mm.
which we're talking gigawatt scale deployments. And then you're talking about deploying billions of dollars in batteries potentially. And for those, you really need to make sure that your working capital situation is okay. And so, there's definitely tweaks that you can do. You can offer discounts for early payment. I think everybody always talks about wanting to work with some of these really large companies, but what you don't know about those really large companies is they might have net 60 or net 120 payment terms. And if you have a 4-month lead time on your components and you need to pay your contract manufacturer, 3 months before you ship, that leaves a pretty hefty hole. And so that's something that we've been kind of working with our supply chain team from day one and making sure we're mitigating as much as possible. I think the way UPS and data centers work is they're used to procuring and paying upfront, which is awesome. They don't pay for the whole thing, but that's allowed us to mitigate it. And then by the time we get to those larger scales of the robotics space, we'll be able to kind of leverage some debt, whether it's through a BDC or venture debt or bank debt, since some of those companies are pretty large, and make sure that we don't really have any working capital issues.
Yeah, there's an obvious and um, understandable temptation to just think about the end margin, right? When you're building a business. And like, if you're going to be able to sell the product for twice as much as you spend on it, then great, right? And you don't immediately consider the timing of when you spend on it versus when you deliver it. Um, but over the long tail, if you do model it out over time, right? Being smart about your working capital, aligning the timing of those payments, or even better, getting paid before you have to incur the expense, right? Just allows you to scale so much further and generate so much
100%.
more traction without needing to take on existing equity capital that all ultimately comes out of your proceeds at the end, right?
Well, and the other part too is it is margin you brought up this point, but like if you are financing, you are paying for your debt typically. And if you're
Yes.
paying an equity, you're still paying for it. That's more indirect. But factoring that in, understanding the lead times of those components, and also factoring in the fact that the vendors or the suppliers that are buying your product might not pay on time, and
Yeah.
and how you handle that. And for AAA rated companies, that's not really a big deal, but making sure you're doing a credit check for smaller companies that maybe buying your product is really important. If it's half million or $1 million in POs, maybe that's not the biggest deal. But if you're talking about a 30, 40, $50 million PO, I I can't even tell you how many companies that I've heard that are smaller than us that have gotten blinded by that fact. And for me, I learned those lessons in a smaller scale, and I will not need to learn those lessons on a larger scale.
Yeah, it's you know, for a lot of startups, just avoiding debt altogether, especially early on, is really smart. But those of us that came from a finance background understand the cost of equity when you're modeling it out is generally higher than the cost of debt. And equity financing feels free until suddenly it feels unbelievably expensive when there's a solid chance of a good outcome, right?
That's
So
exactly
at
right.
some point, like founders do need to reevaluate how they finance growth. And a lot of times, the simplest answer is you give up just a couple points in order to align the timing of working capital. That's it,
Yep.
right? You're either financing POs, you are giving discounts for upfront payments. I mean, SaaS companies have done this forever with, giving 8 to 20% discounts when you pay for your full year subscription up front, right? Um, but that type of sacrifice ends up being so much cheaper than the alternative, which is just endless equity raising to fund your growth. And in the end, you're left with a small sliver of a big business.
Well, and I think that actually brings up an interesting point, which is the way venture is trending, mostly due to this advent of AI companies where they go from 0 to 30, 40, 50, 60 million in 8 months, 12 months, which is just speed we've never seen before. It makes the late 90s look like, a very slow horse race. And what that does is kind of create somewhat adverse incentives where a lot of the VCs are pushing you saying, well, why haven't you done $250 million in revenue? And hardware, the name is embedded with hard. It is very difficult. And so one of the things that we've preached over here is just build somewhat slow and steady. I think we could easily have over $100 million worth of demand for our products next year, but I don't really want to do much further over $100 million worth of product because you're talking about procuring at that point thousands and hundreds of thousands of different components. You're talking about how you're actually spreading those out. Are you delivering those all at once? In some cases, if you get a $60 million order from a data center operator, are you going to deliver all of that at the same time? And then you're just going to leave your production line completely unattended and you're going to pay for that upkeep? Or are you going to try to structure it where it's monthly? Hey, we're going to deliver X thousand units and do it one at a time. And kind of keeping true to yourself while also making sure that you're not taking a valuation from the equity side that's lower than you otherwise would if you were to just say, oh, sure, I'll talk to the hyperscalers or this or that and sign a letter of intent that never has any intention of getting fulfilled. That's just something we don't really do here. We're building in a way that I think is very logical and sustainable to set us up for, candidly, a very big 2027 and then 2028 and beyond. And I do see so many hardware companies where they're so focused on getting these big headline numbers, and then you actually read through the fine print, and you're just like, this is never happening.
100%. And I appreciate the long tail sort of view you have on this because it's something I tell people in fundraising a lot too is like the near term win that everyone thinks about is just getting the highest valuation and the most amount of capital, right? In the long run, like you don't actually make money as the founders and
No,
employees when you raise a Series B, right? You make money at the very end, and getting to the very end means getting investors who stay aligned with you, setting reasonable, ambitious but reasonable expectations along the way, and being able to stay on course, right? If you burn too hot and flame out early, no one walks away with anything, right?
100%.
Um, the same is, of course, true if you go too slow. But people are way too focused on winning the initial headline and not enough on winning, the long-term race.
It's the short-term gratification element that has become quite pervasive in society, and I understand it and I get it. And sometimes you want that satisfaction and gratification of seeing yourself in that position, but I I know my founders and partners agree with this. Like, we want to build a sustainable business. We want to build a business that could eventually have a lot of flexibility from an exit opportunity standpoint. And that's how we've chosen to do it. We have an incredible cap table with really good partners. I don't, they are our investors, but we're keeping them appraised, and they're incredibly thoughtful individuals who believe in what we're doing. And having that type of relationship is so important if you want to build a good, hopefully long standing hardware company.
Yeah. Yeah. That's really cool. Really cool. All right. Well, quick hitters to wrap up. What did you take away from your experience at Goldman that you think has provided the most value throughout the rest of what you've done?
I think it's just working with incredibly talented people. I remember one of the weirdest experiences was I'm personally left-handed, and the first day I got on the desk, I had to sign some forms that you do as a new hire. And I remember somebody behind me was like, "We got another one." And he asked the people on the 12-person desk to raise their hands if like who was left-handed. And I think 10 of the 12 were left-handed. I thought it was just so random and so funny. And I felt like I'd finally found my people. And I actually think the most important single thing from Goldman, in addition to just candidly having to work very hard, being in a tough environment where if you make a bad decision, you get called out for it. And I don't think it's in this mean, nasty way. It's just you have to be accountable and you have to own things. But it's the relationship that you create and the friends that you have that then you leverage those over the course of 10, 11, 12, 13, 15 years. And that is to me the most important thing over the long haul is seeing them go and do their own things, start their own things, and leveraging that talent and that network over time.
100%. Yeah, I'm glad you said that because I had another person on the podcast last episode who came from big time Wall Street finance background and talked a little bit about how like the actual skills you learn there are not super transferable to entrepreneurship,
No.
which I agree with. I do think there is a lot of value though in the standard that you learn to set, right?
Yes.
Being able to see what like great looks like to some extent, just the highest expectations, the how much you're expected to work, how sharp your work product is supposed to be, that is just drilled into you so early. And even having been out of the world for a long time now, as both of us are, like I still can't, like I still have pet peeves on typos and small little mistakes that other people don't, right? I still feel like I, expect more out of myself and the people I work with in terms of what you're going to put into this, what the quality bar is. And I think I like mentally still benchmark myself against the people I worked with at those early jobs because they're all still off doing great things, and we all take our own paths, and that's not a direct comparison anymore. But once you've had that peer set, right, you feel like you are, you want to maintain the relationships, you want to hold yourself to the same standard that the rest of your peers are hitting. And you also just have a higher bar for your own quality of work, I think.
And I think that point is really important, which is that this level of instant gratification that I think a lot of people are seeking nowadays, and I understand why. At Goldman, you do get punished for the little things. And I actually think that is so important early in your career to understand why little mistakes matter. I'm laughing because I'm looking at one of my colleagues bought me a nameplate that says Chief Alignment Officer because I am really, really anal about making sure that from a presentation perspective, when you slide through it on a PDF, everything looks the same. All the all the shapes, et cetera, are left aligned because I want to make sure that we never are getting dinged by any VC, any investor, any customer for things that do not look right. And I drill it down into the junior people that work for us now, and they laugh sometimes, but it matters. It makes a difference.
Yeah.
We've gotten meetings that we should not be getting because our website looks awesome and our materials look awesome. And there's a cool factor with it. And, understanding that that is your baseline is so important before you're able to get a lot more responsibility and a lot more ownership. Because how am I supposed to trust you if you're not checking to see if something says Q1 versus Q2 when you're sending it in Q2? It is
Absolutely.
the little things that kind of add up over time. And it's a hard lesson to learn, but it is such a necessary one.
But what you said there is the important piece, right? It's the compounding. It's not in a vacuum. It's the attitude it instills, and the roll up of every little thing being right creates a much better end product. It's the dumbest version of like why they focus on folding shirts perfectly in the military, right? It's
Yeah.
like every little
Yeah.
daily habit. If you care deeply about that, I know you're going to do your important job well, and we're not going to have to worry about just constantly cleaning up messes, right? Um,
Well, and
so
especially in
yeah,
the age of
that's
AI, making sure that things are peer reviewed and you're actually monitoring what it is outputting, because
yeah.
it's great when I see three EM dashes in an email, I know instantly that you were using, ChatGPT or Claude or whatever to use it. But if you have the intuition and the knowledge to understand why people might be picking up on that and how you can tweak that to make it more your own and make it more personal and no errors, that's what I think is that judgment that I value.
Yeah, yeah, that's exactly right. Um, you I know we're wrapping up on time, so I can cut this whenever you need to run. But you've been in California for how long now?
7 years. Crazy.
Where in the state are you these days?
I'm in Southern California, North County. It is the single greatest place on earth, bar none. And I, the first day I moved here, I told my now fiance that this is where we are going to raise our children and spend the rest of our life. And I will do whatever it takes to make sure that we can have the lifestyle that I think both of us want to do that. And so you should visit me, Paul. Um,
I would love to.
it is a very stupid place.
Do you think that because you went what New York for the first 4 years of your career,
Yeah,
San Francisco for the next
that's
few,
right.
and then now to what you think is kind of a forever home? Do you think that I guess if you were talking to someone else graduating college, I think about this sometimes.
Hmm.
There's value in each of those stages, like you were in the right places at the right times and develop like picking up some of the characteristics that are associated with each culture you were a part of.
Yep. So I always think about the difference between New York and San Francisco as in New York, people there, like on a high level basis, are seeking to preserve wealth. In San
Yeah.
Francisco, you go there to create wealth. And I loved the energy that I had from New York City, but the startup culture there, I think, is relatively underwhelming in terms of what I was looking for. Like,
Yeah.
building things is my passion. I like building businesses. I like being able to see, I mean, in our lab right now, like, we're building a full mock-up of something that we're working on, and it's really cool. And we do stuff like that every single day. And in San Francisco, that's incredibly common and pervasive in the culture. In San Diego area, it's a little bit different. It's definitely more hardware focused. We're kind of part of this hardware corridor that exists between, call it, south of LA and the, you know, San Diego area itself. And it's just a completely different vibe and energy. And there's some of those startups where people are looking to chill and settle down. And you've got to figure out how to retain a culture where it's a little bit work hard, play hard, but maybe it's not the best place to spend your early 20s. But I think starting in your mid to late 20s to your 50s, et cetera, it's an amazing spot to be building a company.
Yeah, I love where I live in South Bend now. It's the same as you. Like this is where I am raising children and
Hmm.
want to be and it's great. But I'm very glad that I spent some time, in and my path was different, but in Chicago out of school where I thought that I did get exposure to, a different type of culture, motivation, skill set, um, and just industry. And then, I was in the Dominican Republic and kind of got a very
Yep.
opposite view, a very small community, very different culture. And I think sometimes I feel like people move around a little too much in our generation. And there's also a lot of value to being able to pick things up from those different places and be in the right place for the right stage of your career and what you are looking for, before you ultimately find the place that, you feel like you can be comfortable long term.
Completely agree. The
Yeah.
last thing I'll say is to that point, I never was thinking to myself, oh, I have to move to San Francisco or I have to move to San Diego or I have to live
Yeah.
in New York. I mean, when we were rooming together, we were talking about me and you living together after
And
the
Clayton, we'll shout
internship.
out Clayton. Yeah.
Yeah, and Clayton. And I basically on the last day of the internship found out that I was going to be living in New York City. And so I was just like, okay. And my
I
entire
remember
life
that day
changed.
well.
Yeah, and my entire life changed.
Yeah.
And then kind of similarly, this opportunity, the opportunity at GoodLeap kind of came out of nowhere. And it was the only job I was looking at that was outside of New York. And it was the one that I took. And it was not because it was in San Francisco. It was because it was the right opportunity at the right time. And similar to this one, most of the things I was looking at were based in San Francisco. And it just so happened that this felt like the right opportunity and was ready for that shift. But I never, thought to myself, oh, I have to get here. And I think people that try to be the architect of their own life almost too much and over architect things will find themselves disappointed. You just got to let things work themselves out to an extent, especially when you're 2, 3, 4 years out of school. And it's just funny how it all comes together.
It's a really great point, because it's the same with me. I never wanted to live in any of the specific places I did. Like, that wasn't the goal. It was just about the opportunity that brought me there. And maybe there's something to that. Or it's just good luck on our end. But in any case, Greg, thanks, man. It was so great
Always
to be
a
able
pleasure,
to catch
Paul.
up and to get educated on what you guys do, which is incredible. But really value this friendship, and love working with you guys at Proper Voltage.
Likewise, you guys do a great job for us, and I would highly recommend you to anybody. Also, having a company that does not do your books well sucks, and it it causes a lot of problems down the line. So thank you, and thank you to your team.
That was not a paid promotion. Thank you, Greg. You are the man, and we'll talk more soon.
Talk soon.